The year gone by has certainly been one where I think we've performed very well physically. We've invested a lot in our factories and our cane fields over the last couple of years, and we saw good performance on the physical front. However, weather didn't play ball, and adverse weather conditions, and I must admit, combined with currency fluctuations, sort of combined to unwind a lot of the benefits that we saw from physical production.
Well, of course, currency is a big factor to consider here, with just so much of your export earnings coming from African countries like Malawi, like Zambia as well, to the EU, and earnings on that front curtailed by the strength we've seen in those respective currencies. What's your strategy when it comes to African production and export? To what extent are you exploring some ways to mitigate against that currency risk?
Alicia, we're very well positioned in terms of the geography within Africa to take advantage of regional opportunities within Africa where there are deficit sugar areas. And whilst we are firmly of a view that the EU will on the longer term give us a very good return, we do have the ability to supply more sugar into the regional markets in Africa, where we enjoy, if you would like, a geographic advantage over suppliers from the world market, and can earn a reasonable price from those countries within Africa. So I guess we've got the ability to arbitrage between the two markets should circumstances provide or make it necessary for us to do that.
Of course, that's just one of the strategies to take into consideration. The other is the fact that you're also looking at diversification a little bit more keenly. We've got a cogeneration project that's underway in Swaziland. What kind of stride is the company making in that regard?
Alicia, power generation is core to our business. We seek to produce power in every one of our sugar factories, and it's the extent to which we can increase that power generation and become self-sufficient and thereafter sell into national grids. And very exciting for us now is the project in Swaziland, which is probably the first commercial scaled cogeneration plant from sugarcane in Africa. And we now have a model that we will take elsewhere across our operations. And I think you're correct. That is the ability to diversify the earning stream and to start earning something from power generation, eliminate risk from our business, reduce costs, and contribute to the economies in which we operate.
Of course, with projects like that, expansion projects like that in the pipeline, we've got the company seeing a ramp up in interest costs, and that looks set to continue for a while yet. And with that in mind, we've had analysts saying that this could constrain bottom line profits moving forward. So even if operating costs grow strongly, those interest costs and rising interest costs will eat away at that. What's your comment around that, especially with the fact that we're potentially looking at the beginning of a tightening cycle come the second half of this year?
Yeah, I think I wouldn't disagree with that, Alicia. We've got to consider we're at the end of a very large capital spend program, and yeah, that money has now been dispersed into our projects, and we're starting to service that debt. So naturally, one would expect an increase in finance costs. I think we have very strong cash flows coming out of our business, and we're very well positioned to more than adequately service that debt. But you're right, I think there will be a negative effect on earnings as a result of higher finance costs, but that is to be expected. Mm-hmm. These type of projects generally span 2 to 3 years, and yeah, you can't do it for free.
So with the fact that we've seen a company that's been highly geared after 5 years of capital expenditure, and where the market is looking for the company to deliver in the coming year, what's your outlook for earnings moving forward?
Alicia, it's going to be another tough year in 2011-12 because South Africa will still suffer a second-year impact of the drought, and it will be largely our ability to offset that in our other operations that I think will guide earnings for this year. And we would expect to see that we do have that offset and hopefully grow our production base, albeit marginally, after the offset. And after that, it's all about currency. And one would hope we see a strengthening of the euro, perhaps a weakening of the rand, and if that happens, I think we will achieve earnings growth. But it's not going to be easy this year.